Hi, everyone, and welcome to the Buffett and Beyond Saturday Market Recap for November 18th, 1824, and this is being recorded on Monday morning. So remember, folks, if you want to live on this beach like Jimmy Buffett used to, you've got to learn how to invest even better than Warren Buffett does now. And, well, the market rally taking place after the election totally reversed itself last week as interest rates just shot up. The S&P fell 2%, while the tech-heavy NASDAQ shed 3%. Not a fun week for the markets at all, was it, folks? And the Fed didn't help much, as Fed Chief Powell didn't create much certainty over which direction interest rates would move, as he's unsure how inflation goes as we head into the holiday season. And let's take a look at the S&P 500, and we can see over here that it went up to the top, went over the top, very, very strong market, and then leveled off here for a couple of days, and then just on Thursday down a little bit, and Friday it hit this 20-day moving average down here. And as we can see, the intermediate term indicator down here is just about touching that red line, and that would give us a sell signal if this crosses to the downside. Now, when we look at the S&P 500 candlesticks, we get a closer look that the S&P fell below that 20-day moving average and then closed just about right at it. Now, down here we get a better look because this intermediate term indicator just did not quite touch that red line. But right up in here, the volume, the red lines represent the volume when the market closes. In this case, the S&P closes on the downside. The green lines represent the S&P as they close on the upside. And you can see the rally for the election took place in here. Big jump. Close this gap up here. And you know what they say about gaps. Eventually they're filled. And that's what we're doing probably today, and this is Monday morning as I'm recording this. And so we had heavy volume on Friday, and we'll see what the market does today. Now, the Dow Jones Industrial Average did not quite touch its 20-day moving average, which is this green line in here, but yet here's this gap down here. And we can see that we are overbought down here in this intermediate term indicator, overbought, but it has not it's turning down, but it has not given us that sell signal. But you can see the red lines, the downside volume built up over Thursday and Friday, which is not a good sign going into the weekend, because that means the people on Friday, especially the traders on Friday, are not trusting this market heading into the weekend. So therefore on Friday they just sold stocks, and they sold them pretty heavy, folks. And when we look at the QQQs, which is the NASDAQ 100 stocks, and we can see it fell below its 20-day moving average. Now, some people in here might call this an island reversal, and that, of course, is not a good sign heading into this coming week, this island reversal here. But we do see this market has almost closed that gap in here. So we will probably see a retest of this market going back up and touching this 20-day moving average to see if it can go above it. So that's what we expect today, and I'm talking about Monday. That's what we expect. Maybe we'll get a little rally to try to see if we could break through that. But you can see how heavy this volume was on Friday. Very, very heavy, this downside volume here. And did that black line cross over that red line? No, it's sitting right on it. So we're seeing this turnover. But usually when you see this black line go up far away from this red line and then come back down over it, not a very good sign. And we'll see what happens with the NASDAQ today. And remember, on Friday, we said in our Friday newsletter that the November, now this is for portfolio protection, really disaster protection. It's about 12.5 to 15% below the market. So just in case something crazy happens, you're protected. And these puts are fairly inexpensive. And what we do every now and then is we sell a covered call, which we did in the market. The other day, we sold a covered call on NVIDIA, which, by the way, announces its earnings Wednesday after the market close. And of course, the NASDAQ had a tough week this past week. But anyway, this November 15th SPY put, this is about a $140,000 portfolio, expired, and we told you to go out and buy the February 21st SPY 500 put. So these are the SPYs which represent the S&P 500. And as I said, this is just really disaster insurance, but a lot of people like to have this and say, forget about the day-to-day fluctuations, even the weekly fluctuations. As long as we're protected below about 12 to 15% below the market, we're protected against any kind of disaster. Let the market do what it's going to do in between 0 and 12 to 15%, because we get those deflections or inflections and reflections all the time, folks. So we had a tough week last week. We're going into this week. The market looks like the Dow wants to close down, and the NASDAQ wants to open up higher. So it might be testing that 20-day moving average we were talking about from the underside. We'll see if it could break through. We'll see if things can calm down, because don't forget, Jerome Powell is uncertain about interest rates, and that's really what hurt the market Thursday and Friday. As Jerome Powell said, we're not sure which way inflation is going, and therefore we have to be uncertain about lowering interest rates going into the end of the year. That's what spooked the market. Meanwhile, interest rates are rising. The 10-year Treasury is up as high as it's been in a long time, about a full point higher than it was when it reached about a 3.5% level some months ago. And now it's up near 4.5%. So that's hurting real estate a little bit. It's hurting the market, hurting credit cards. And folks, people just aren't sure about Jerome Powell and his tough talk on inflation. But it's a new week, and let's see what's happening. So, folks, remember, if you want to walk on this beach like Jimmy Buffett used to walk on, then you've got to learn how to invest even better than Warren Buffett does. And don't forget, we also put short-term hedges on the QQQs using the SQQQ on Friday. And a couple of days before that, we sold a covered call on NVIDIA. So we have enough money to buy those puts that we call disaster insurance. And so we are hedging a little bit of the portfolio to the downside. So, folks, you take it easy. Let's watch and see what the market does today, and we'll just go from there. So, folks, you go out, you have a fine day. Don't worry about the market. We're in all good stocks, and therefore we know these stocks are making money, and they're not going anyplace. Yes, they'll go down, but those are the kind of stocks that pop right back up as soon as we get a rally. So, folks, we'll see you later. Well, actually, we'll see you tomorrow morning with a report on the market. So, folks, go out, stay safe, enjoy yourselves. Forget about the market. You're in good stocks, you're in good portfolios, and they're doing much, much better than the S&P 500, which means they're doing better than 96% of professional money managers out there over the longer term. All right, folks, we'll see you back here tomorrow.